Okay, so your mortgage is approved. Now what? I find a lot of people hear the word approved and they've mentally checked out. They are ready for their keys on closing day. But there are a lot of things that have to happen between the time your mortgage is approved to the time you get your keys. And they don't always go in the same order. So I'm just going to go over them so you can feel prepared on what to expect next. So let's start with your mortgage. Your mortgage, you may have got the approval notification, but it's very important to understand your mortgage may be a conditional approval. Maybe there's still some conditions you haven't met yet. These conditions can vary. Maybe they need another piece to support your income. Maybe they need additional documentation for your down payment. They might need an appraisal. So although hearing approved is very exciting, don't let it make you think that it's a firm approval or that you're fully done with the mortgage process, because there may be some things that you still need to do. Secondly, is I find after you get your mortgage, the next most important thing I think to set up is your home insurance. So this is a really good time to shop around. A lot of people don't take advantage of shopping around for home insurance, and they just go with whoever their car is with, whoever they had tenants, contents insurance as when they were renting. But I know personally we saved a lot of money when we got our home insurance and did not bundle it. We saved more money, but we did go with a insurance broker, and she was fantastic. She helped us a lot. And also there's other things you might want to consider there. You might want to get rings or jewelry insured, maybe golf clubs, and there's different types of insurance too. Certain insurance companies won't cover basement flooding, especially depending on where you live. So take the time to shop around, make sure you get a really good deal, but also make sure you're getting insurance that covers you really well. After that, setting up your utilities, especially if, say, you're coming from renting, you may have to set up utilities for the first time. Maybe you've never had a hydro bill in your name. Note that some utility companies may ask for a deposit. I've seen this up to $500 depending on your credit score or your history with the utility companies. So if you are asked for a deposit, a little workaround I have seen is sometimes they'll ask you to provide a copy of your credit bureau, and if you do that, they'll waive the deposit. So that's really important. Finally, if you are buying a condo, your lawyer should have already reviewed what's called the status certificate, and your lender as well. Most lenders require a copy and review it, but sometimes they don't look at it until close to closing when the lawyer provides it to them. And there can be issues that can cause some undue surprises at the end. So I always recommend make sure your mortgage broker gets a copy of your status certificate and make sure they've sent it to the lender to make sure they've reviewed it, or at least they've got a letter of opinion from your lawyer. Some lenders just want to know what your lawyer thinks of the status certificate. Status certificates are really important because remember, when you're buying a condo, you're actually going into business. You're buying a property that is co-owned with someone else, and that's the condo corp. So it's not all you. You are buying and having a relationship with that condo corp. So you want to make sure their financials are stable going forward. And then your lawyer. So your lawyer is going to potentially send you an upfront maybe form to fill out. They're going to ask some information about you. They'll get the purchase agreement, but then you may not hear from them until closer to the end. And that can be very typical. Most of the time, lawyers don't want to sign with you ahead of time because what if rates change? What if something changes, you want to change your down payment? They don't want to have to re-sign with you. So I find you're often meeting with your lawyer about a week, maybe 2 weeks before closing. And what they're going to do is they're going to make sure your home insurance is accurate, it's all in place, and that it has the correct mortgage company listed. They're going to get your documents from your mortgage company, make sure everything's how you want it, and they are going to also get the purchase agreement and make sure everything matches up. The purchase price matches up, everything. And they're going to talk to you about different types of insurance called title insurance. There's two types. There is title insurance that protects the lender, which is most of the time mandatory. And then there's title insurance, which protects you, which is most time optional. I think title insurance is a great investment for a few $100s. It protects protects you in case you ever had to incur legal costs about something that may be on your property line, or to protect the title of your house. Title fraud seems to be on the increase. So also, if you're getting near being mortgage free, it's a really good time to make sure you have title insurance, because when you do not have a mortgage secured against your property, with how wide information is available to everyone, so many people know that your title is free and clear without a mortgage, and it actually makes your title easier to steal. So having title insurance is really important. And what the lawyer will do is they'll take all of that information, combine it into one big signing package, and they're going to have you come in or do electronic signing, and they're going to go through all of the information there and sign. And there is going to be a spreadsheet. This is how I describe it. So basically, the lawyer is in charge of all the money. So they're going to have a statement where they keep track of your purchase price, how much you plan on putting as a down payment, what amount you already gave as a deposit, how much the mortgage company is giving, and then they're gonna add in all the closing costs. Maybe you have land transfer tax, maybe you just have legal costs. There could be adjustments. So say the seller of the home that you're buying prepaid the property taxes for the entire year, you're actually gonna have to reimburse them. It's not like the city gives them a credit back, you reimburse them. So we always say to plan for adjustments of different costs that the seller might need to be reimbursed for, up to $1,000. Often we don't really see them that high nowadays, but it's always better to be prepared rather than be surprised. So what the lawyer will do is they'll add up how much you still owe, considering you've already given a deposit, and they will tell you that number. And very close to closing, you're going to have to go to your bank and get a certified check, which means it can be cashed immediately. Probably the biggest check you may ever write in your life. And you're going to bring that check to the law firm. They're going to deposit it and keep it in their trust account. And then on closing day, what happens, because you've signed everything, you've brought in your money, your mortgage is complete, you've set up your utilities. On closing date, the lawyer is going to use the funds from their trust account. The mortgage company is going to wire them the mortgage amount. They're going to send all that money to the sellers. Once the seller's lawyer receives it in trust, they'll confirm it, and they'll say, okay, you can now take over the title of the property, and the lawyer will register the property in your name. That's when you officially own it. And sometimes all that wiring money, different bank, different institutions, and sometimes there might be a document that was outstanding until that day. So just because you're closing, let's say on Friday the 1st, doesn't mean you get your keys Friday the 1st at 9 a.m. There's still a lot of things that happen in the background. We like to be prepared. We like to hope that you'll have your keys in the morning, but plan to have them at the end of the day. And this is why, if at all possible, try to avoid closing on a Friday, because if there was a surprise, something happened, even out of our control, you don't want to delay to push your closing into the weekend, because we can't close a transaction in the weekend. You can't register a property without it being business hours. So especially a Friday of a long weekend is definitely a time you don't want to plan for a closing, because if your seller was buying a house dependent on your money and now your money's delayed for any reason, it causes a domino effect of transactions that can't go through, and there are costs to that, and they typically get put back. So that's why we like to be prepared. We like to get everything done as in advance as possible, and it just relieves stress, but there are certain parts we can't do until later in the transaction. So once you get the keys, this house is now yours. Your home insurance is in place. Your mortgage starts. So a misconception I hear all the time is, I want to pay on the 1st. My closing date's on the 1st. Do I have a payment that day when I move in? No, unlike rent, you pay your mortgage payments in arrears, meaning you live there for say 30 days and then make a payment. Whereas when you rent, you pay and then live there. So that's something that I find people are happily surprised about. But that's a reason why, say you start with monthly payments You'll wait, you'll have to make a full monthly payment, but then you wanted to switch to bi-weekly payments, you're gonna have to make a half a payment again 14 days later. So sometimes it's nice to make sure you have your payment frequency set with how you want it in advance, just so you don't have to make a couple payments seemingly all close together. Now it's important, once you've closed, you want to set up your online mortgage portal if you have it available to you. It typically takes about 2 weeks to be registered on the portal for your data to show up after it's been funded. Most lenders will send you a welcome package in the mail or via email, just outlining the features of that mortgage company. Every mortgage company has different features, different ways to access them, different ways to contact them. If you have arranged your mortgage with a broker, you can always come to us to help give you information. There are a few lenders that if you wanted to make a change, we have to direct you to call them. But typically we know the direct call, we can tell you exactly how changing a payment could affect your long-term savings. But most of our lenders, we can get a signed consent form. So if you want to make any changes, we just get that signed and you just call us and we can make them on your behalf as long as you ask us to. And then once your mortgage payments start, that's when you start paying down your principal. Hopefully you start building equity in the property. It's important, if you are planning to pay property taxes directly to the city, that you set that up. You know, you're aware of how you can pay your municipality. Keep an eye out for the bill. Sometimes with a new owner, there's a delay in when you get the bill, so it's not on schedule. So you might get a bigger bill, just depending on how the schedules fall. So just keep an eye out for that. And even if you're paying with your mortgage company, if you get a bill in the mail, it's always good practice to, send that into your bank, send it into your broker, just so they can make sure it's set up correctly and everything is going where it needs to go. But that's the steps, and hopefully that makes you feel more confident as a new home buyer and just understanding the process between mortgage approval and closing. And so you're left with less questions and you're feeling more educated and empowered.